Welcome back. The artificial intelligence chip boom has continued to give Nvidia a boost. In the third quarter, revenue more than tripled to $18.1 billion, while earnings per share surged to just over $4. Joining me now as we unpack these numbers in greater detail is co-founder and CIO at Anbro Capital, Craig Antonie. Thank you so much for your time, Craig. Now, of course, for all of our viewers to get up to speed, just to start off with, just frame Nvidia as a company for us and the different segments in the company.
Sure. Well, pleasure to be here, Zanati. Thanks again very much for having us. Nvidia's got, four, I suppose, divisions, if one wants to call it that. The most important and I guess well known of them is the data center business. And the data center business really is a business that tries to, facilitate high-speed computing. And that's really where the big AI push and the AI boom is coming into play. The data center business, really what it enables the business to do and for its clients really to do is breakthrough performance with fewer, more powerful servers and supercomputers, and also to do this at a much more efficient way and with a much lower cost. The other part of the business, which I think they're probably very well known for as well, is gaming and cryptocurrency mining. And these are the sort of chips that are used to not just make your gaming experience faster, more efficient, visually more appealing, but also in the crypto mining space, to help with a massive amount of compute that is required when it comes to mining things like Bitcoin. So I suppose, in a very sort of short way, that's their claim to fame.
All right. Well, let's actually talk about those numbers that they came out with last night. I mean, this magnitude of growth is incredible. So you did have quarterly revenue there surging by 206% year on year. I mean, these growth numbers are rare in this market. So just talk to us about the picture that is painting.
Yeah, well, I mean, the numbers were going to be important for a stock like this coming into these results. I mean, one might remember if you went back a quarter or so ago, it was really the massive boost in Nvidia's earnings, which started the whole AI boom and the AI craze, and really the recovery of pretty much the whole stock market, if you like. So there was a lot riding on these numbers. And as you alluded to, Zanati, they didn't disappoint, right? I mean, the numbers were spectacular on pretty much all fronts. Revenue growth was up 206% year on year, which was fantastic at $18.1 billion. And that was a full $2 billion ahead of what the market and consensus was expecting.
Wow.
Earnings also surged, as you said, up $4.02 versus $3.39 expected. So again, a very massive beat versus what the market was looking for. Now the data center business, which is the one that's I think getting all of the attention at the moment, is growing incredibly fast, and that was up 280% year on year. And this is now accounts for 77% of the revenue for the company. The gaming business, which is also big, 17% grew to $2.9 billion in revenue. That was also up about 81% year on year. So, coming into the numbers, they had to be good. And, they really, really were. I think what also is important is the guidance going forward. I mean, they've alluded to $20 billion more or less in revenue for the next quarter. And a further increase in margins, which was quite a phenomenal feat, I think. If one looks at the margins for this quarter, they were at 74% gross margins versus 71.5% last quarter. And now they're expecting them to go up to about 75% next quarter. So, I mean, not only are they growing fast, but they're also managing to take in a little bit more of that growth every time in terms of margins. And that's translating right into free cash flow, which is phenomenal. So they delivered $7 billion in free cash flow for the quarter. It's putting them on track to deliver about $25 billion in free cash flow for the full year. And cash in the bank is now at a whopping $18 billion. Now, I mean, to put that into context, Zanati, that's about what Standard Bank's market cap is at the moment.
And they just have that as cash in the bank. That is incredible. I mean, just talking about this guidance, basically translating to 231% growth in revenue in the fourth quarter. But my question is, can they achieve that even with the US export curbs of these advanced chips to China?
Well, I suppose the important thing about, momentum in this whole AI boom, if you like, and whether it can continue we can look at it in two ways.
Yeah.
So the first thing we can look at is to say, well, what is demand looking like in the business and in the industry? And if one looks at the business per se, we can look at their pipeline.
Yeah.
And last quarter, their pipeline grew by, I think it was about $3.6 billion.
Yeah.
This quarter, it grew by $6.5 billion. And they've pretty much alluded to the fact that they've got about $22 billion worth of pipeline that they can see at the moment. And management also seem to think that there's a good chance that that could grow as the year progresses, or as they move into the new financial year after this quarter. The other way to look at it, I guess, is the total size of the market that Nvidia is operating in. And how big is that, and what does that look like for long-term demand? Well, Goldman Sachs at a conference a couple of weeks back, and Nvidia representatives there were talking about, the various markets that they operate in. And, they were talking about a total addressable market in that space of over $1 trillion. So, if one looks at the various business segments that Nvidia has, they will touch that $1 trillion market in multiple different ways. And to put that into some sort of context, they're expected to generate about $60 billion in revenue this year. And that's going to rise, if you look at the forecasts out there, to about $100 billion next year. So the current market, they expect to be worth about 10 times what they are expected to sell into for next year's earnings.
Yeah.
So that gives us some context. You can't ignore China, of course. I mean, China is a very big part of their business, and it could take up to 25% out of the data center revenue forecast or revenue growth going forward, which is a substantial number. I think the nice thing, I think, for us as investors at the moment is demand is so strong. We're not seeing the impact of that China sort of ban, if you like, or limitation of supply into China. That's only going to actually start coming through or start impacting their numbers in the next quarter. So that probably explains why after hours, the share price hasn't done a heck of a lot despite this massive, beat and raise. The market's probably looking at this and saying, well, the China ban kicks in pretty much now.
Yeah.
Next quarter, they've still given us a really good guidance. But how does that China impact fit into guidance for the next 12 months? And also when growth rates start to normalize, we don't see these sort of triple-digit growth rates all the time, and they can't continue in infinitum. What does that look like going forward? So I think the short answer to your question is, well, for now, demand is strong. The market is big, so there's lots of opportunity there. But, China is not something you can ignore. It's a very big piece of the market, and it's something we've got to watch very closely.
Yeah, all right. Well, thank you so much for that analysis, Craig. Really, really appreciate it. Of course, just going through the numbers of the star of the show, of course, the biggest company right now on the tech-heavy NASDAQ, if I am correct, Nvidia. That was the co-founder and CIO at Anbro Capital, Craig Antonie.